Hi, Dan.
Good morning, Trevor. How are you?
I'm very good, thank you.
Excellent. Let me just make you the boss. 1 second. Here we go. Okay, you should be able to show your screen now. Okay, we're looking at Euro USD. Is that right?
Excellent.
Okay, I make it 9 o'clock, Trevor. I think we can get started if you're ready, sir.
I'm ready. Ready?
Okay, hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. So if you have any questions for Trevor, you can ask them in the questions tab if you go to our webinar control panel and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours time. So if you'd like to watch it again, you can do so there. And we'd love it if you'd also subscribe to our channel and click on the bell to get notified. The webinar handouts can be downloaded from the handouts tab of the control panel. If you're having any problems locating or downloading the handouts, please let me know in the questions tab and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, and the second is a CFD guide, which explains all the different products that we offer at FXChoice. If you're watching on YouTube, these handouts will be available in the description box below the video. Just please click show more and you'll be able to see them. For those of you who don't know Trevor, although I'm certain you all know him by now, he has over 40 years experience as a technical analyst and trader and was global head of technical analysis at Bloomberg. Trevor, over to you, sir.
Okay, very good. I'll just move that over there. Okay, welcome everybody. And today, as usual, we'll start off with the currencies, then we'll go to cryptocurrencies, then the precious metals and the commodities, crude oil, and then to the stock indices. But please, if you've got any questions, want me to go into any more detail or cover any other security within reason, where we've got, as long as we've got enough time, but do it all through the chat box, through directed to Dan, because I can't see your questions myself. But I'm very pleased if you join in the conversation. Now let's start as usual with the currencies. And what I'm showing you here is the RRG, relative rotation graph, of the G10 currencies versus the US dollar. Now, for those of you that are not familiar with it, what we've got is a quadrant here. Everything on the left-hand side of the vertical is underperforming the dollar, and so it would be a good thing to short against the dollar. Furthest left is weakest, the New Zealand dollar, and then everything that's above 100, that is nothing, has got relative momentum outperformance. So it could be that you could be underperforming but have positive momentum, but that's not the case at all. Everything is heading southwest. Southwest means west means weakening, and south means without positive momentum. So weak, it's as negative as you can get. Most negative is the New Zealand dollar. Canadian dollar, our favorite of the past, has swept across into this zone here over the last few weeks, and has gone from best to worst, almost in a way. Australian dollar always was a bit lagging. Norwegian crown was good. The pound was good, but it's now moved across, and the euro too. The euro's over here too. But all of them pointing southwest. These samples here, this is the pound today, Friday, Thursday, Wednesday, Tuesday, Monday. So that's the progress of the week. So do you remember last time when we were talking about it, we had several over on this side, but it was kind of split. So we did have some things which were outperforming the dollar, but with the action of that amazing action over this week, bounce of the dollar, everything has gone to southwest, and everything looks like it's heading further that way generally. So let's look at that in some detail now, and let's look at the euro. Firstly, the big leader. So this is the rise in the dollar. After that Fed announcement, there shocked the market, and the market obviously was too much a crowded trade for dollar weakness, and it fell away very, very sharply. It had lost momentum, so we were seeing the weakening going on. And in fact, the last sell signal on the RSI was back here towards the end of May, and it's been weakening off since then. If we could look to the weekly chart, we can see that we have this high and then this lower high here. And what does high, higher high, and lower high spell out to you? Yes, potential head and shoulders. So I've drawn in this neckline here. It's not a head and shoulders until it breaks the neckline, and the neckline currently is around 117.60. So it's a long way below us before you can say it's a head and shoulders, but it's the shape of a head and shoulders potentially in formation. The count would be then massively down to 110 again, right down here if it went. But at this stage in the progress of the head and shoulders, the most likely outcome is that it isn't a head and shoulders, because potential head and shoulders mostly don't become head and shoulders. It's the triggering of the neckline that turns it into one. So because what is happening is it's coming back to support levels. This area, we'll say, centered on 118 here, a big area here of 2-3 months of trading in this zone here, giving us a big volume profile here. And then when we came back down from this head here to retest, it held really well in April, at the beginning of April, at this support point, and it could do it again. So we have to watch the behavior as it approaches this line. So going back to the daily chart here, this is what we're talking about here. The 117 area here has got to hold. If it starts to steady here now, then we might well conclude this is not going to be a head and shoulders pattern. We just had one lower high. Every high doesn't have to be higher than the previous one, and the bull market can resume. That is a bear market for the euro. Too early to say, but we had that big savage sell-off last week. So far today, we're looking a bit steadier. So I'm hoping to see that we have some white candles this week, maybe stabilizing a bit and looking a bit steadier and losing downward momentum. Look at the RSI here. We've got a high, a lower high, lower high, lower high, deep low reading here, and now turning up through 35 for me is the trigger. So I'm potentially looking for an opportunity here. It's early, too early. It's in a very threatening place, you know, and if, for example, today ends up being another weekday, then I think we are heading down towards that 117 level and threatening to break the neckline of the head and shoulders. But on balance, at this point, the probability is slightly more in favor of stabilizing and holding and moving up towards the resistances we've got above. On sterling, so look at the weekly too on sterling firstly. It looks so good, you know, sterling, but we did get this bearish divergence here, and we mentioned it, and you know, I kind of was trying in mentally, I was sort of ignoring it because it looked so good, the pound, but I should have paid more, given it more weight in my thinking. We had a high, a lower high in the weekly MACD. That's quite a major message of loss of momentum. So in a way, you know, with the benefit of hindsight, of course, we were well warned of this, the likelihood of this sort of sell-off. Maybe not that it would be as savage as it was, but there we had this plummet here. But what has happened? We have still got it. It's still above the 133, of course, support point. It's above the 137 last higher low pattern, and maybe it's going to stabilize again and make another higher low. So it's the jury's out on that. But what we do not want to see is a break of this 136. 50, let's say, area here, because then we're probably headed swiftly down to 133 if that happens. But if we stabilize between here and there, then the case is still strong for this to continue on up. Let's look at the shorter term message here. So we're coming down into this support area here. So what are the indicators looking like? The MACD, of course, is very negative and widening. So momentum is increasing on the downside according to that. The RSI went deeply down, started to turn up on the basis of this one white candle here. Breaking up through 35 from below, for me, would be the sign that this support here has stabilized the market, and we might well be have completed the pullback and be ready for a bounce into this resistance area here, centered on what should we say, around 141.50, centered on 141.50, this consolidation here. So look for, you know, early part of the week, some stabilization, some white candles, the RSI coming up here for a bounce back towards that resistance. It was such a savage sell-off. It took the oscillators to very extreme readings, so a bounce at the very least wouldn't be surprising. We have been following the GBP Japanese yen, because earlier the Japanese yen was the one thing which was left of the dollar, was weaker than the dollar, very close to it, so correlating with it. And then over on the right hand side we had the GBP, which was furthest on the right. All that's changed now, except the Japanese yen has stayed where it was. Let me just show you that there. So here it is, just left here. So it's sort of very highly correlated with the US dollar itself. So it's an alternative, slightly weaker than the US dollar. But now the pound is also weaker than the US dollar. So what have we got on the chart here? We've got high, higher high, high, lower high here. There was the warning. Then we had this big sell-off here into support. Now this candle on its own so far is rather bullish, with the shadow below and the rejection in it. So there is a stabilization message there that's formed out of this candle here now on the daily chart. So market goes down, didn't want to be down, and it started to turn up. We're in an area of support. 152 down to 150, the big round number. There's very solid support. The MACD, of course, is negative and widening, getting more negative. The RSI is deep down and starting to turn up here, but 35 is the trigger. Don't be too keen to buy this. It is stabilizing at support. That's constructive, but I think you need to give it a couple more days before you can feel that it's safe enough for the reaction to announce the reaction is over. And so far, the kind of stop loss message on, if you're thinking in that way, is 151.25, let's say, there for that. But you know, the whole reason you put on this trade is now no longer valid. You know that the pound was strong and the yen was even weaker than the dollar. That's completely changed now. So as a strategy, the strategy is there's no reason to have this trade on anymore. Now we must also look at the Canadian dollar, which we followed so much. But again, the strategy of being along with the Canadian dollar versus is really not not applicable anymore, and it's because it had that sort of high beta outperformance on the upside. It had the terrible performance on the downside. So here we've made this saucer bottom. This goes into my album of chart patterns, saucer bottom here, and now we're powering ahead very strongly indeed here. Let's look at the weekly chart, and just to see what's under threat here. We're coming to this area of resistance here, and we're testing this trend line. I know we're through it, but look at how the trend line has been drawn. In fact, for discipline's sake, I'm going to change that to a dashed line, because it's just a pattern of lower highs. It's not something I could use for trading to think it's really precise. It isn't, but it is a pattern of lower highs, which is being tested now. But we've got resistance here, but between 125 and 126. So that is resistance of the US dollar. So here we come up, there it is there, the 125 to 126 level, and we're approaching it here now. Many of you will be familiar, there is a chart pattern called a cup and handle, which is an extremely bullish pattern when you see it at a low. So far we've got the cup It could be we form the handle when we get punch into the 125.26 area, where we hesitate, and then if you break the high of that, it often brings in very large moves and long-term moves after that. But we're talking way ahead here. We're talking about a pattern which hasn't happened yet. What we are doing is we're approaching resistance. The RSI, you can see, is a very high reading here. That is because it's strong, not because it's weak. But that's what it's telling you. And the MACD is very strong and widening. So we have to see what it does in that zone of 125 and 126. It's got a chance to fail, and it's there. If it doesn't and just hesitates and then breaks up, then the implication of that is very, very bullish indeed. So the whole Canadian dollar story that we had previously, with it being the one furthest on the right of the dollar, is finished, and it's now, you know, the outperformance is now the leading underperformer. But what was, going back again to the RRG, furthest on the left here was the New Zealand dollar. So if you are a bullish of the dollar for a longer term period, and that you think the trend has changed from the long-term trend has changed from bearish to bullish, then the best candidate for that currently is the New Zealand dollar. So let's have a look at the New Zealand dollar. So here it is. Let's look at it on the weekly chart here. So here you see this is chart-wise a very important level we're at. We're testing these lows at 169.40 down here, breaking it. Perhaps you could say it's already broken it, 69.20. If this is so, and we're not holding at that low, then we're headed, I think, without doubt, to this solid support at 168 there. So it could really plummet if it decides to turn lower again. The MACD is negative on it, and that's a very strong message there. So here we're sinking, we're breaking this low here. We've got this one white candle here, which is the only, you know, thing that is bullish about it at all. The trend is strengthening according to the ADX. The RSI is low because it's very weak. We've got the small uptick, but we haven't broken 35. The MACD is negative and widening. So this potentially, and in my view, if you're interested in my view, is if you want to be long with the dollar, this is the best candidate to exploit that. This is the one furthest to the left on the RRG chart, also with a very vulnerable looking chart. If it follows through on the downside, this could really plummet hard because other ones are meeting support. This one isn't meeting support until quite a lot lower than here. So it's frictionless, perhaps, on the way down. Now moving to the cryptos, again, we'll go to RRG to get the big picture here. And in the middle, we have the dollar. In this leading quadrant here, we have Bitcoin. So we have slight outperformance of the dollar from Bitcoin, which is impressive since the dollar itself was so strong. And then underperforming Ethereum and Litecoin. Litecoin is in the improving quadrant, but pointing in the wrong direction. It's heading south here. Heading towards that quadrant there. Ethereum's in the wrong direction completely. It's heading southwest. That means if it's heading west, it's weakening against the dollar, and south without positive momentum. So it's very weak indeed. So with that in mind, let's have a look at the charts. Start with Bitcoin. So let's look at the weekly chart here. Now, the thing to sort of note about Bitcoin, we are clearly stabilizing here at the same level that we stabilized on the way up. Here, let's say centered on 136. I know we're below it now, but centered on 36,000. Sorry, not 136, 36,000 here, which is a 50% retracement of the advance. Okay, so just going back here. We're looking at Bitcoin over here, looking the best of the group. So now looking at the daily chart here, I've drawn now this oblong pattern because we're consolidating here. It's ranging between 30,000, I'll say, because that's a big round number at the bottom, up to the highs here. You know, the highs aren't lining up perfectly, but around 42,000 up here. So 30,000 to 42,000 has contained us for the last 3 or 4 weeks, forming this consolidation, and still, you know, just looking like we're going to continue to consolidate. We came down through 35 here. We came down through 60, up through 35 here, came down through 65 here. Look for what happens now. We're down below 35. Are we going to turn up here and continue the range pattern, or we will keep pointing down, which will be indication of the breakout downwards? The support is very light at this bottom end here, so it could easily break down. The MACD is close to crossing, so it's a vulnerable thing. So it's stabilizing at the January consolidation area there, and it's now ranging. It's vulnerable. You know, these levels must hold if we're not going to lurch lower. It's a dangerous thing. We've got the breakout level is on the upside at 42,000, which is quite a way above us now. So although this looks best, it doesn't look particularly attractive to me. Ethereum. So we got the same sort of behavior here. It came down, but it's stabilizing above the consolidation here, but this consolidation was much lower at 61.8. So this fell away much more relatively. That shows the bears are stronger in this. We rallied, and then we're now weakened off again here. The MACD is negative on the weekly chart. So this is not a bullish picture at all. We've got the must hold level here at 1,700 roughly, and we've got these lower highs in here. It looks quite threatening to me. The MACD is negative, the RSI is below 35 but pointing down. It's weak. Support is not strong here. I just don't like the look of it at all here. It's very dangerous for another lurch lower. And Litecoin, sorry, that was Ripple. Litecoin, this is even the least attractive of the lot. Here we fell down more than any of the other ones, so that means that the bears were strongest of the three here. We've rallied very weakly, and now we're turning down again here. So this is structurally a very weak chart, you know, and really, you know, I think that certainly if we break 120, we should slip quite quickly, you know, right down here to 60 and 40 area here. The MACD, weekly MACD is negative here. On the daily chart, it's also looking very weak. The support is not strong at all at 120 here. At least on the other ones, we bounced a couple of times, but here only once, rather weakly. We're moving towards it. The RSI is pointing downwards. The MACD is close to crossing downwards. It hasn't quite done it yet, it's, you know, it's looking pretty weak. The Bollinger Bands are very narrow. It doesn't squeeze. It's not a squeeze. That was a squeeze there, which didn't happen, but I think it's getting ready to make a move, and I fear that move is to the downside. Moving now to the precious metals. So looking at gold, well, gold really took a big hit last week. That was just amazing and a terrible pullback, a powerful pullback. However, it didn't actually do enough damage, strangely enough. It probably damaged a lot of people's P&Ls, but to make the MACD actually cross. So that's still officially bullish. And what interests me so much is that we've come back to very significant areas of support here now, centered on 1720, but extending up to 1760. But from back here and here from 2020, and this one here at the beginning of the year. And so those powerful areas of support, which should be enough to stabilize the market. On the daily chart, well, we've got this one white candle after that terrible week that we had. Here's the support. It's very strong here, and I would not be surprised if this week we stabilize and actually recover quite a lot of the ground lost last week. So we got the sell signal last sell signal here. The RSI has come well below 35. It's turning up here. Trigger for me would be a break of 35. The MACD is still negative, of course, but I think the chart is stabilizing. The RSI is looking ready to turn up. Hasn't done it yet. It would be premature to announce that the pullback is over at this point, but we will have a clear stop loss below the low of the lowest candle in the run down, which currently is Friday's candle. Now, let's have a look at gold-silver ratio and see if we'd be better off in gold and silver. I was saying before that we looked a little bit better to be in gold, silver than gold, but I think it's not the case anymore. It really doesn't matter which you're in. It's flat here, the gold-silver ratio, and so they're both moving together. There's no outperformance one or the other. So with that in mind, you should go for the best looking chart. So is this a better looking chart? So this is silver, of course, we're looking at now. And here we've got, we plummeted on the weekly chart, we've stabilized here, we've got a huge consolidation here, many months of consolidation here that we've punched and we've got to the middle of it. On the daily chart, we've come to the middle of it, it's starting to stabilize a bit. The ADX is starting to rise. That would be a negative message, actually. The RSI has come down deep low reading at the end of the week, now turning up, but not turning up through 35 yet. So not to say that the fall is over yet. So which is the better of the two charts? For me, I think it's actually gold of the two. So if on one hand, there's not much outperformance one over the other, but this is a slightly better chart in the sense that this is sitting on top of these two resistances here, whereas the silver has punched into a broad area of resistance and consolidation. And so I think this looks a better opportunity of the two, but either, if it's going up, will probably go up in tandem, more or less in tandem with each other. Moving now to Brent Crude Oil. Here we've got the weekly chart, and it's very important to see the context of this. This break of $70 area here, taking out those two highs, that's a very important break. This high here, the 2019 high, it's not a big resistance. It was only a little spike here at 75.60. I think we're on our way to clear that and then go to some very important resistances, from years ago. In this market, and could release quite a lot of energy. We had some weakness midweek in last week, but it was very mild. The sell-off is this it? Really the pullback. It's the bears had a chance and they didn't achieve very much at all. It's stabilized at its first minor area of support and looks as though it's ready to go higher again. This does look good and does look as though it's going to continue further. The MACD is positive. The RSI has turned up, pointing up again above 65 here, looking good on the crude oil. So unlike the gold, which really took a massive hit from the dollar, the crude oil sort of hardly took any notice of what should have been a very substantially negative message for crude oil. I'm going to move to the stock indices now. Any questions, Dan? Dan, any questions so far?
Sorry, Trevor, I'm with you. I was just having problems there with the mute button. Yeah, we have had a couple of questions, but you actually covered them. I have your access to your notes, so don't worry about it. We can continue.
Okay. All right. Now on the S&P, we've got this giant bull market, and we've got this one black candle here of last week. What does this mean? We did have a small bearish divergence. Let me just show you that more clearly here in the MACD, which you could have said was a warning for this, but it was a small bearish divergence. Therefore, it's probably the implication of it is not very big either. So here I've looked at how big is the reaction so far. It's about 50% reaction of this recent move up from the mid-May low here, made a new high, then we'll come back 50%. That's a natural place for it to stop. It's right in the middle of a massive consolidation here. Yes, in the daily chart, the the indicators are still negative. The MACD is negative. The RSI is pointing clearly downwards. And so we can't say it's stopped yet, but it's punching hard into resistance. As long as it holds 4,055, we've still got a constructive longer term pattern. So I look for that to happen. If that does happen, then we're in serious trouble. So that's 405 here, these two lows here, then I think we could probably go down to 3,900 quite quickly if we broke those there. So whether that bearish divergence is enough to do that or not, I'm really not sure. But we're punching into support, testing that support. Notice the ADX is 12, a very low reading. It's telling you the market is flat. It's not in a strong trend anymore like it was. Moving next to the FTSE, here, you know, the FTSE also sold off very hard here, suffered badly on that dollar move up, and the weakness of sterling should have held us up, but it didn't. We suffered badly here, punching down hard. Let's get the weekly perspective on that. So lost a lot of power here. The MACD has crossed down, so after being positive right back since October 2020, it's now crossed down here. We're punching hard into support. It's looking negative. It looks as though it could weaken further. This doesn't look good. The ADX here 14. It's better than 12, but it's only 14. That's a very low number, representing flat message, trading range message, bad investment message. I'm going to skip the DAX for a moment. I'll do the I'll do the DAX next, because the DAX is the one I really like. As you know, I've liked that, and this looks a lot better than everything else. Let's look at the weekly firstly here. So we're flirting with highs, important highs here at 14,000 really here, and we've got this so far indecisive candle at the high here. We broke it and we've come back again at it. So here it is on the daily chart. There's that high there, and here's us testing it here. This really looks to me like it wants to go higher. So if any pressure is off the other indices, which are struggling and are rather flat and consolidating, I think that this one could lead the way upwards here. This one is looking, really quite good. The RSI is pointing downwards, and it's come down through 65, so that's a minor sell signal. The MACD is clearly very positive here. The Bollinger Bands are pointing upwards. The moving averages are in the right order and pointing upwards. The ADX here is 15. It's the best of the bunch. 15 is still a low reading, I must say, but it is the highest ADX of the stock indices. But if of the group, if the stock indices start to move up again, I think this is the one that's going to lead it up. And if stock indices plunge, then the FTSE is going to lead it down. All right, and one other thing I wanted to just show you was the gold S&P ratio. We've been watching that and following what has happened here. That's the wrong thing. Okay, here, so again, looking very threatening. So this is gold divided by the US 500. Rising here means gold outperforming, falling here means gold underperforming. Then we had a steady period here. I drew this trend line in. It's a weekly sample here. Clearly we're broken, and we're testing very important levels. 2018 low, 2007 low here. This could be very significant for the long-term implications for gold and the stock market. So, breaking those levels could mean that this relationship becomes not permanent, nothing's permanent, but long lasting, and that would be that it would be better to be in the stock market than be in gold, if this is, and it's close to making that statement, and that is the trend currently as well. And put that downtrend line in there. All right, any questions, Dan?
No question. Well, actually, we had 3 requests, but you covered all of them anyway in your notes. And I also noticed that, did you want to cover the Japan 225 this week?
I did, and thank you for reminding me that there. I went to the D30 because that's the one I like best. But in the longer term, the one I like best is actually this one. It's lost a lot of power, of course, recently, but I think that this is getting ready to have a big move up. And I'm going to just, for those of you that have not seen this before, let's go back to 1980. Okay, that's before you were born, I'm sure of that. But for some reason it doesn't, says, no, you don't really mean that, do you? So I do mean that. So range, come, or is it just bringing in the data? 198. That's the context. So we broke that high here very emphatically. Then we've come up here. Now we're pulling back here, but we've got resistance here at 33,000. Then the all-time high here. But this multi-year move from 2010, really, well, almost from the global financial crisis low here, is continuing really powerfully. So although we're weak currently, I'm just going to put this back, otherwise it ruins all the other charts. While I'm looking ahead, if we go to the daily chart here, it's looking sloppy and not interesting and sideways and all that kind of thing. But as soon as this gives a buy signal, then I think you've got to jump on this one, because the long-term trend here is so powerfully up in it. So it's a pause that's going on here. It's a slightly drifting pattern, maybe a flag shape that's going on here. Currently, it doesn't look bullish. It looks quite threatening in the short term. So I'm not saying buy it now, but we had it, we wanted to get out of it, we did get out of it, and then now looking to rejoin this at some level, probably lower than here, but the power of that longer term trend is great, and so it should take over at some stage ahead of us in time. So keep this on your radar, and this could be a great trade, for the second half of the year. All right, Dan, thank you very much indeed. Anything else?
Trevor, no, that's it. Thank you very much. I think we can wrap it up for today. Well, thank you very much, everybody, for attending. We'll hope to see you again, same time, same place next week. And don't forget that we're posting this webinar to our YouTube channel in a few hours or so time. So if you came late and you want to watch from the beginning, you can do so there. Or if you just want to watch a piece, you can go over to our YouTube channel. And if you do so, please don't forget to subscribe and click on the bell to get notified. Okay, Trevor, anything else to add?
No, nothing at all. It was a rough week for many people yesterday. The violence of the sell-off in markets and the strength of the dollar there means that it was a painful experience for an awful lot of people. I hope it wasn't you. I wonder whether I myself heeded enough the bearish divergence messages, the slowing up that was going on there as things were making new highs the week before last. And gave that enough weight in my own thinking, but I got stopped out, so that's what stops are for, and thank goodness I did get stopped out. So anyway, let's see if we're starting to stabilize and bounce. And thanks for joining us. I look forward to talking to you next week, and may the trend be with you.
Cheers, Trevor. Thanks, everyone. Bye-bye now.
Bye-bye. Bye.
Bye-bye. Bye.